Welcome to the Sustainability Business Podcast, a show bringing conversations to the community shaping the future of energy and sustainability. Be sure to join us on LinkedIn and learn about the innovative solutions that are turning the tide towards a more sustainable future for all.
Hi, everyone. My name is Amy Haddon. I lead global marketing and communications here at Schneider Electric for our sustainability business, which is our advisory team working with clients across the public and private sectors around the world. This month marks the second anniversary of the U.S. Inflation Reduction Act, or IRA, and it has significantly reshaped federal tax credits for renewable energy and clean transportation, and also changed how entities can leverage this regulation to meet their objectives. As a result, we've seen significant interest from both public entities like schools and municipalities, as well as companies in the private sector to make use of these provisions. There are specific tax implications, and that's what we're going to be talking about a bit further today. I'm joined by two of my colleagues in our business, Tammy Tolle with our public sector team and Hans Royal with our private sector renewable energy team. Thanks, Tammy and Hans, for joining me. Let's start with talking a little bit further about what the opportunity is that is presented under the IRA. And Hans, I'll start with you.
Great to be here. Thanks, Amy, and great to see you, Tammy. So, number one, the Inflation Reduction Act, the IRA, is really a game-changing piece of legislation that did a lot of heavy lifting, that did a lot of things for the clean energy transition here in the United States. So the incentives are significant for clean energy technologies to accelerate that transition. And importantly, a lot of those incentives come to fruition or come to reality through tax credits. And tax credits are a credit against taxes owed. And so naturally, in order to monetize tax credits for the private sector, and we'll talk about the public sector and how it's a little bit different, but for the private sector, in order to take advantage of tax credits, you need to actually pay taxes, right? What good is a reduction of taxes owed if you don't pay taxes? And so it's really important to note that many large-scale renewable energy projects actually themselves are not taxpayers, or at least don't have enough what we call tax liability to fully take advantage of the tax credits that are made available by the IRA. And so it's really important for companies, for these projects, to fully monetize all of the tax credits available. And they can do that now for the first time ever under the IRA because of a provision called the transferability clause, or the fact that these tax credits are transferable from a large utility scale wind farm or solar farm or other technology. They're transferable from that project or that developer to a taxpayer, a corporate taxpayer, and they're transferable in the form of cash. So it's an exciting opportunity for corporations to take part in monetizing these tax credits and helping these projects actually get built by leveraging the unique provision in the IRA called the transferability clause. Important to note quickly that tax credits are not new, but what is new is for the first time ever, these tax credits are transferable from the project to a taxpayer. And that's the game changer from a private sector perspective, that we're helping our clients take advantage of. And we'll get into some more details on exactly how that works and what the benefits are.
Great. Thank you, Hans. And so, let's move from large utility scale down to the smaller public sector entities that we support, like schools and municipal buildings. Tammy, can you tell us a little bit about how those entities are taking advantage of the IRA?
Sure. IRA has been a game changer as well on the public sector side. I've been in the energy sector for 26 years, my entire career, and I've never been more excited or seen more opportunities for our clients in this realm by any means. So definitely a game changer. Very exciting for clients because now public entities, they're eligible through the direct pay provision to essentially qualify for a base tax incentive of 30% and up to 40 and 50% in many cases, depending on the location. Are they in a low income area? Are they in an energy community? And so it really brings the cost of projects down And the incentive just makes a world of difference financially. So it brings those projects into reach for the majority of our public sector clients now.
That's just so awesome. I know we're going to talk about it a little bit more in just a minute, so we'll save that. But it's a very exciting time, as you said. So Hans, if you could now detail a little bit more for our audience around the eligibility and access to this transferability clause that you've mentioned.
Yes, absolutely. So number one, there are a variety of project types, asset classes that are eligible for tax credits, right? And that includes large utility scale wind farms, solar projects, battery storage, renewable natural gas, green hydrogen, advanced manufacturing. So there's all kinds of technologies that are eligible for these very lucrative tax credits. But I'll give a specific example for illustrative purposes. Let's say, for the sake of argument, there's a $100 million wind farm out there. That's the capital cost of the wind farm. It's $100 million. And let's say that project is eligible technically under the IRA and otherwise for, let's say, 30% investment tax credit or 30% ITC. What that means is that that project is eligible for $30 million of tax credits, which, as you can obviously see, would significantly help the economics of that project move forward. Again, presuming if that wind farm or that developer doesn't have $30 million of federal taxes owed, then what do? How do they effectively use all 30 million of that incentive? And the answer, of course, right, post IRA, is that they can actually transfer those credits to a taxpayer. So a large corporation that does pay federal taxes, right, like Schneider Electric or many of our clients, says, okay, I'd like to support that wind farm, right, financially to move forward. I pay a lot of taxes. How about I use the tax credit transfer provision to purchase those tax credits from the wind farm in exchange for cash? And the incentive for the investor or for the tax credit buyer is that they'll receive the $30 million in this example of tax credits in exchange for a slight reduction of the nameplate value or the face value of those tax credits. So for the illustrative purposes, let's say the taxpayer buys $30 million of tax credits at a slight discount, let's say $28 million. They pay $20 million in cash for the wind farm. The wind farm can use $28 million then to literally build the wind farm, right, or invest in future projects. And the taxpayer receives $30 million in value that they can redeem on their next tax return. What has happened for the taxpayer is they've saved $2 million. So there's a financial incentive and a savings opportunity for those corporate entities that can engage in this transaction. And it's a symbiotic relationship because the wind farm or the developer otherwise wasn't able to extract that value from their project without being able to sell those via the transferability provision, essentially. Before IRA, again, these tax credits have been around. There were mechanisms that were more complicated to monetize these. It's called tax equity. But essentially now, with transferability, it's a much more straightforward and simple transaction for a taxpayer to purchase $30 million of tax credits for $28 million cash and save $2 million in the transaction. And, of course, support the clean energy transition in that way.
That's amazing, Hans, and so interesting to hear both you and Tammy talk about just how these cash incentives are making such a big difference for organizations. However, we also know that decarbonization efforts and goals that organizations have set around decarbonization are also really important levers. Can you talk a little bit more about how these provisions can be used to also meet decarbonization goals?
Absolutely. So important to note that doing a tax credit transfer transaction, even without receiving, the specific decarbonization benefits, is still in its own way a way to support these projects, right? As I mentioned, these wind farms and other technology, they need a partner to help monetize those tax credits for them. And certain of these technologies, including renewable energy projects like wind energy, solar energy, and others, they also produce something else other than tax credits, right? Energy and renewable energy certificates or the environmental attributes. And so a corporation that cares about both getting some savings via a transaction, but also making significant progress on their decarbonization targets, can actually negotiate that they acquire tax credits via the tax credit transferability, and also renewable energy via a renewable energy or a REC contract, renewable energy certificate contract. And that can be a really exciting outcome for the corporation to get kind of these co-benefits simultaneously. Because by the way, the same wind farms and the same solar farms that are out there selling tax credits also have renewable energy that they can also sell to the buyer. Important to note that these are separate transactions from an accounting and a technical legal perspective, but they can be done simultaneously to each other so that the corporation or the buyer in the private sector can get those tax savings and simultaneously the direct decarbonization benefits. And we'll share a story about a specific example of this type of transaction and the outcome for the investor a little bit later.
Great. Thank you so much, Hans. Now, Tammy, if I can pass the mic to you to talk a little bit about how these same types of incentives and regulations are really helping public sector entities to take advantage of the IRA.
Yeah, Amy, for the public sector, the game changer is that direct pay allows tax-exempt entities for the first time to actually access tax credits. Those clean energy tax credits that Hans is talking about, tax-exempt entities were never able to take advantage of them. So a new provision, what that means is this new provision is literally allowing schools and cities and local governments and state governments and universities to now install solar and microgrid and other renewable energy and battery storage and the like at a dramatically reduced cost. And so we're seeing such an impact that we can make for our clients whenever we couple that with energy savings, lower cost of the renewables, and these massive incentives, quite frankly.
And we know that these entities can be resource constrained. Clearly, that is a big benefit. Are there other barriers that are inhibiting entities that the IRA has really helped to remove?
Yeah, so for public sector clients to qualify for these types of tax credits, of course, there's a process. It's all lined out through the IRS, the Treasury Department. So a client will go in, they will work with a partner or implement themselves, but there's a lot of help out there to develop and execute a renewable project, place it in service, pre-register with the IRS on their website, and then file a tax filing for the year that it's placed in service with supporting information. And that's essentially how they get their direct payment back. So it's all lined out, and it's a historical benefit for public sector clients.
Amazing. Putting these resources in much easier reach for these entities, I know.
Absolutely.
Hans, you mentioned a minute ago that we want to do a little bit of storytelling. So let's start with the TCT and specifically how we're taking advantage of the provision here at Schneider Electric.
Yeah, really exciting to be able to announce this transaction and speak about it publicly. So Schneider Electric, right, we're also a large corporation. We pay taxes, and we also have renewable energy and decarbonization targets in our own right. And the other thing is that tax credit transfers, these TCT transactions, they are new, all right? In other words, before the IRA, of course, tax credits have been around for a long, long time, right, for decades. But what is new is the transferability, as I described earlier, between the project and a taxpayer in this particular way is new. And so Schneider, in our own right, wanted to really demonstrate the feasibility of tax credit transferability and, by the way, the decarbonization benefits that could be had in order to really demonstrate that to the wider marketplace. So really exciting to share that Schneider, we were actually the first or among the first announced transactions on the corporate side under tax credit transferability, really intentionally, right, to sort of demonstrate how this is possible because it is a new type of transaction. And so we engaged in a significant tax credit transfer deal. We announced it earlier this year. It's a roughly $80 million investment tax credit, or ITC, transaction, where we're receiving tax credits roughly $80 million worth, and we paid a discount for those, as I described earlier. Simultaneously, this was through a developer partner of ours that also happened to have renewable energy certificates available. And so because we wanted to demonstrate the feasibility of both tax savings and the co-benefits of decarbonization, we structured a 10-year renewable energy certificate contract alongside the tax credit transfer deal. And the outcome for Schneider was significant. We received tax savings, of course, but we also are receiving 110,000 megawatt hours worth of renewable energy for the next 10 years, which was the amount of renewable energy that we needed to achieve our 100% renewable energy goal for our North America facilities. So a super exciting outcome for our sustainability team and our ESG goals, and also an exciting outcome for our shareholders, because this transaction, by the way, overall is actually cost neutral to our business, to the shareholders. It's actually better than cost neutral. We're actually saving money through this transaction, accounting for the entire 10 years worth of renewable energy that we're getting. So super exciting outcome financially, but also from a sustainability and leadership perspective to demonstrate how this can be possible for other corporations to follow suit. And by the way, we've had many other companies that have followed suit and have done similar transactions after we announced the first one.
Oh. Yeah, it's just amazing, Hans, when I think about how all those wins line up, and so grateful that we were, the benefactor of this provision. Certainly, I think it's part of what has helped us to secure Time Magazine's acknowledgement of our sustainability objectives as the world's most sustainable company in 2024. We're also, of course, very proud of our longstanding legacy as the world's largest corporate renewable energy advisor. And as you mentioned, we've worked with literally thousands of companies all over the world to help them take advantage of innovative contracts and ways to procure. So thank you so much, Hans, for your own leadership in that. We're also very proud to be the #1 ESCO in the United States for many years running, as recognized by Guidehouse Insights. And certainly part of that is the way that we structure innovative work and holistic work in the public sector. So Tammy, can you share a story in terms of how we're using the IRA with our clients specifically?
Sure. Well, and just like Hans said, there's just some historic parts and pieces to the IRA, transferability being one. So on the public sector side, barriers have just been crashing down because essentially tax exempt entities used to not have any tax liabilities. And so it didn't help them. Well, with the direct pay provision, now they're able to receive, like I mentioned, a direct payment. And what that's done is we've seen it open up a market for many of our clients that now it truly changes the financial equation, and it brings to life these types of projects and programs that we can help lead them through. So right now we're seeing a big impact in our business and through the market. And I see that twofold. So first off, through the ITC on the solar side, I looked at our portfolio. Right now, we are either developing or constructing 70 projects, leveraging $40 million in ITC benefit for clients.
Amazing.
Yeah, so that's a really big impact for public entities that are always on, they're usually pretty cash-strapped type budgets. And so this really unlocks the ability to make the clean energy transition. And then second of all, another big impact is that there are significant incentives, tax deductions for energy efficiency projects. And so we've been monetizing those through the expanded 179D program and giving it back to our clients. So we've monetized and given back just this tax year, the first year, over $10 million to clients to help fund their projects, to help fund their goals. And so it's really exciting. It's really rewarding to see these come to life.
Thank you so much, Tammy and Hans. It's really been wonderful to hear about what a unique and timely and exciting opportunity the IRA presents. As we close our conversation today, any final thoughts, Hans?
Yeah, I would just say, look, there's never been a better time to investigate renewable energy and clean energy opportunities. And that's true globally, right? We have clients with facilities all across the world, and there's always new and exciting opportunities for transitioning to clean energy and renewable energy and decarbonizing. I will say, of course, though, for the United States, looking specifically at tax credits and tax credit transferability, for corporations that are eligible for this, it's one of the most exciting structures in order to achieve savings and simultaneously potentially achieve ESG or decarbonization benefits together, which can be a really great outcome for companies. We're seeing dozens and dozens of companies get off of the sidelines and actually enter into this marketplace in real time, we, of course, can help you with that. And of course, it's important to understand, hey, is your organization even eligible for this? That's something we can help with, or you can do your own research or find other partners. But certainly it's a good time in the United States to investigate these opportunities if you're a corporation in the private sector and want to understand whether or not you can achieve these savings via these structures. So great time to act right now, and we're happy to help investigate whether or not this could work for you.
Awesome, Hans. Tammy, anything you'd add from your perspective?
Yeah, absolutely. Hans is right. We're in a new era, and the direct pay provision has been a game changer for all of our public sector clients. So again, do some research, investigation, find a good partner to help you through, and make that a reality for your organization. So act now, and we would also love to help you on that journey. So thank you so much for the opportunity.
That's a great way to conclude, Tammy. It sounds like a great and very timely opportunity for many organizations around the country. So we encourage you to take action, to reach out to any of us. And I want to thank Tammy and Hans for joining me today in this conversation, and we look forward to connecting with you soon. Thank you. Bye-bye.
Thank you for listening to the Sustainability Business Podcast. We hope you've been inspired by the Trailblazers and their innovative solutions for a more sustainable future. Be sure to connect with us on LinkedIn to stay engaged and informed. Together, we can be the change makers our planet needs.